We have Sonal Varma also with us this morning, India Chief Economist at Nomura, on global growth, the impact of coronavirus, particularly on India. Sonal, good morning. Good to have you with us. What, according to you, is the scale of the impact, particularly, yes, on global growth, but also on India? Globally, of course, we're hearing a whole mix of things. So it'd be good to get your perspective on really how severe the impact could be, even if it is a few quarters down the line.
Yeah, hi, good morning. So I think one thing that's very clear is the epicenter, of course, is China. But the impact on rest of the world is going to be felt primarily through various indirect channels. So, weaker China demand, lower tourism, lower tourist arrivals from China, the supply chain gets disrupted. A lot of countries depend on China for imported components. So there are various channels through which the world economy is going to get impacted. The biggest impact, of course, will be on China. So our own assessment based on how things have progressed so far is that China's GDP growth in the first quarter could slow to as low as 3% from 6% in the fourth quarter. And for 2020 as a whole, growth might slow close to 5.5% from 6% last year. Now, compared to SARS, China is now, of course, a bigger share of the world economy, and this will have spillovers. Broadly, our expectation is it's going to be a very sharp slowdown in the first quarter and then followed by a V-shaped recovery. But I think near-term estimates on the extent of the damage are probably underestimated. So for India, I think clearly India is not part of the supply chain. But for India, I think there are two things that bear, watching. India exports China accounts for about 5% of India's total exports, but close to 14-15% of our total imports. So, in segments where we do depend on China for imports, whether it is on the electronics, chemicals, pharmaceuticals, solar, etc., are likely to see a supply side shock. And second, if the world economy slows down because of China, clearly that is also a negative demand impact that India has to reckon with.
Down. I don't mean this in a perverse manner, but on paper, crude has come down. Crude is down 15% from its recent high. Sometimes bad news is good news for us. I hate to use this terminology, but that's the reality, isn't it?
Well, there's always two sides to the coin, right? So, in fact, I would say outside of, the lower raw material costs in general, crude and other commodity prices have also come down. The other potential positive for India could be, in segments where you cannot import and there's capacity, there's more local sourcing of components. In fact, we just heard this morning one of the Taiwanese companies looking to expand its India production facility because the China shutdown is looking like it might continue for longer. So those are a couple of positives that will play out for India. But in the overall scheme of things, I think when you're specifically mapping this against the hit to world demand and the broader supply chain disruptions, and not to forget that, while oil has come down in the pharma space, the shortages have also caused a lot of medicine prices to go higher. So I think, ultimately there will always be winners and losers. But I think at a macro level, net, we still do think that growth will be adversely hit.
Just to stretch that point on the India impact, Sonal, and besides crude, how do you think is India, poised? Are we more poised to benefit from this situation because of crude? Or do you think are we losing more given our reliance on Chinese imports being pretty high? Just the other day, we were chatting with the management of Blue Star, and Mr. Thiagarajan was saying that just about any and every component for their products has got something to do with China because, part of it has a China import component.
Yeah, I think, to our mind, the net impact is still very much negative. So we've downgraded our Jan-March quarter number from 4.7 to about 4.5%, and 2020 calendar year as a whole, we've downgraded our numbers fairly marginally, but we have downgraded it to 5.4 from 5.5. Like I said, for India, it's a mix of both demand and supply side shock. China today contributes close to a third to world GDP growth. So the China slowdown is also going to bring down global demand by about 0.2 percentage points this year, which will have some spillover onto India. And second, this is a supply side shock because in sectors where you do depend on imported component, and there are quite a few of them, you may have a few weeks of inventory, and so maybe February might be all right. But I think if production does not pick up, and if you look at the pace of migration, going back to China, the pace of migration of workers back into factories are essentially signaling that taking production capacity back to 100% is more likely to happen only by end of March. And there's a lot of uncertainty around this. So I think we can have a couple of months where, inventories are drawn down and you don't have the next batch ready for production. So it's a mix of, the two stuff. But I think, net, I would say it is still a negative impact on growth. It's not a positive impact. Of course, when you compare India to rest of the world, the vulnerability is much lesser. So to put this in context, for instance, this year we've downgraded our growth forecast for countries like Singapore and Thailand, by half to over 1 percentage points, while we are downgrading India numbers only by about, 0.1 percentage points. So relatively, India is less vulnerable, but I think on an absolute basis, it is still a negative impact.
Just how India is poised vis-a-vis, other markets as an investment destination. We're also watching out for Trump's visit, focus on bilateral ties between India and the US. Do you see things strengthening there?
Well, I think the key question there seems to be whether India and US will sign some sort of a trade deal. And I think there's still lack of clarity, and more lately it seems like it's a real trade deal will be signed only after the election. So what we are potentially looking at is sort of more of a mini deal with some agreements around agri products and certain energy and defense related agreements. So more a mini rather than the big trade deal. But I think overall, other than those specific sector initiatives, would not expect anything big to come out because clearly there are still areas of frictions, including on the higher tariffs that India has imposed on various sectoral imports.
Time, and thank you for joining us.